Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the October 16th, 2023, 6 p.m. Central Time. I know you missed me over the weekend. Sorry that I couldn't do these updates. I had a procedure I explained. I become photosensitive. I've been doing this for 2 decades, and I have to do it twice more in November, one more in December and November. And that's it then for another year. And I didn't do it during COVID, so got to catch up is what the doctor said. Been doing this a long time. I'm very fair, and if you're fair, you got to take care of yourself with the sun. And I don't go in the sun much. That's the interesting part. Okay, I don't want to review everything here I'm going to say in the financial market update. That's where I'll give you the gist of things. Suffice to say, the market was prepared for war over the weekend in terms of the Israeli army going into actually Gaza and hunting down the Hamas. It didn't happen. The army is still on the border. They're lobbing shells back and forth also on the other border with Lebanon as Hezbollah is there. Iran keeps making threats. Russia steps in trying to calm things down, believe it or not. Russia trying to calm things down. You know, you got to laugh at the players. The president of the United States is now saying he wants to go to Israel. Today we are watching our Secretary of State he's with the War Cabinet. They had to run into bunkers and our president wants to go there. Does this make any sense? What part of this am I missing on this? All right, the president belongs here, out of harm's way. He's not a soldier, doesn't have to put himself there. The world knows he stands with Israel. You're accomplishing nothing by going there. Stay home. When we take a look at the gold market, obviously gold is a wartime commodity, but only to a certain level. At the end of the day, once the invasion of the army begins, however long it takes, you're no longer at the beginning of the event, you're midway through the event at that point in time, and then there'll be an end to the event. So the gold will get that rush possibly where the market says, this is where we're going to go. Be careful. In order for it to keep going, you'd have to get an event like a war, a real war. Iran stepping in, Russia stepping in, China stepping in, the United States going at it. But as long as it stays to the region with all the verbal threats, you could get suckered into that. Be careful. The real event for gold, I've come to the conclusion, will come when it goes up into the $2,200, $2,500 range, and I do believe it'll go there in time, it'll happen when the Fed starts lowering interest rates, not until then. Right now, if you buy this, you're buying that war event. You can't tell me you're buying it because the dollar's weak. It's not. The dollar's super strong. You can't tell me you're buying it because, interest rates are going down. They're not. They're still climbing. So those headwinds won't go away. It's the emotion of the war. I get it. But you did rally up rather dramatically. If you and I take a look at this, this is a weekly chart. You were up 5%, $97 last week. 97. All the war event coming off those lows. Now, when we take a look at the daily bar chart, you still have the gap. You don't have an exhaustion gap. The market's come up to an area where it's sort of stalling itself right now. The pattern is one of a lower low and a higher high. I think you see that. And if the market continues, the first major area of resistance is 1950, 830. In terms of moving averages to 1980, 150, the 200-day. Pretty important averages. But you look at the Bollinger Band, and the Bollinger Band hasn't been hit, and it's matching up now with the 100-day average. So this whole zone, if we wake up in the morning and Israel's army goes in and you hear all the threats from the world, Iran's going to jump in, this and that, gold will rally. Those are the logical numbers that you look at for where the market might go. To buy here, what is your risk? I don't know where to put a stop underneath the most recent low. I'm sure you can figure one out. I wouldn't know how to do it. Are you overbought? Absolutely. Are you embedded? No. When you look at the gold-silver ratio, the support should be right here in the 18-day average, and if it gets under that, then silver should start gaining on the gold market. When you look at the silver market, unlike the gold, it's not quite up to those areas, but it's the same pattern basically. Or could you argue, and I could, that suddenly it's higher lows, higher highs? I can get rid of that number. And I could put an arrow back there, and I should have. I think that you're in an uptrend that's targeting right now in terms of the swing line this area as well. Support's back at 22.30, let's call it. But you'd have to have a stop well under here into the 20. In fact, what is that number? We can find it together. Let's go to it. Doing this analysis as we're talking right here. So I wouldn't want to see the market under 2177.50 as long as it's not under that number. And the reason, by the way, now I know what I did. You had an outside day down. You took out that day's high. As soon as you took it, you hit the objective, which is the 18, the closest main moving average. That would have been it. Let me get to this the right way. Here we go. The market pulling back. So I'm expecting buyers to show up at 22.30, stops under there, hoping and saying to themselves, if the war breaks out, possibly all metals get the jump and the market might go there. It's the only argument I can make in that market. In the copper market, China is stepping up. They are beginning to do things to make their economy grow. So I am looking for this market to try to find its way to some support in the 353.25 zone. It's not a buy number. It's still a very oversold market. It could embed and even go lower, but I don't think it's going to. I think that China realizes suddenly they're not going to make their 5% goal that President Xi wants to make unless they do something. They only have a short period of time to get it done. They're not on the same fiscal year that all of the rest of us are on, but they've got to do something to get that going, and they're beginning it. So be a bit cautious here. There's nothing bullish in the copper market. It is an oversold market. The resistance is 363. The support, 353.25. Got it? And I think the bears are still in control. Platinum has made a statement. It doesn't want to get down to the Bollinger Band. It had an embedded reading. It lost it right here. Until it took out this low that I'm pointing to, the odds were it was going to get back to the 18-day average. It caught people that were trying to be somewhat bearish in the market. Is there a trend up or down? There isn't. You have a lower low and a higher high. And in the dollar, I think the pros are going to be stepping into this market. Frankly, I think if Friday's high's taken out, you have a clear path all the way up to the 106.50. What is that going to be here? The Bollinger Band is going to be 106.88. So I think if the market takes out Friday's high, let's look at that high one more time together. Let's see if I can bring it up for you. Here we go. At 106.56.5, then I think it makes the run up there. Do I think the pros are buying it here? That's the difficult thing. You have momentum pointing down. The swing line is down. Any close under the 18-day average is actually a sell signal. And yet if there's the invasion, the market goes the other way. Folks, I hate trading wars. I've been around them. Remember the Iraqi war. I remember a bunch of them. Remember, I've been a broker since 1969, a registered broker. That's a long time. All right. You don't think I've seen my share of how these markets react to them? And I'm giving you the sequences that I have lived through. You get the bids in it because you're going to war. When the war stops, you're already halfway through it. You're looking for the other side because the market's always thinking ahead, not behind. It would take a nuclear war, which I have not been alive for, to change everything. And then I don't think I have to worry. Chicago's a big city. We'd be gone. It's that simple, all right? So I don't have to worry about what would happen at that point. Now, what do you have to worry about what happens? Well, we're working now with TradeView. And for those of you that work with TradeView, let me explain this for you. all the suite that I've got here is there, and we're working on actually putting so you're going to be able to point your orders right through us if you want to. In addition, you don't have to. But we're working on that right now. We'll probably be hooked up with them by next month. It takes a little bit to do it. I'll find out more tomorrow. We've gotten the management of the company to go, yes, if you want to do that, because clients of ours use different trading systems. So slow stochastics, my Bollinger Bands. I even like to outline outside days. They're so important. It only takes up 2 pairs of your group. You know what it is if you trade with that. It comes together with all the things that I do. And the way you go about getting this is so darn simple. You simply go to our website, iraepstein.com, and you go in the client section, because that's what you would be. You sign up there. We turn it on. We'll get an email instantly. We'll turn it out no later than the next morning. You're in business, away you go, and we give you everything as though you were a paid subscriber with me, except my paid research, obviously, but you'll have access to a number of the things that our clients do, and once you open up an account with us, if you want to trade through us, we'll set that up for you, and then you get a lot of the goodies. So, iraepstein.com. You can also move your cursor to the top up here, and that'll take care of it. I'll talk more about what I'm seeing on these war events in my full futures market research. I'll be doing that right after this one. Take care.